Hello viewers, welcome to Crypto Mundlix channel. So today we're going to talk about Celsius issue, what else? The algorithmic stablecoins, a deep understanding of what they simply are. And also you're going to see what has happened within the New York session opens up. Now, this guy is called at Cell Hero. He simply gave out his thoughts, explaining exactly what's happening within the Celsius space, just on his thoughts, it's not financial advice. Also on this video, this is just educational purpose, only for education purpose. So my thoughts on the withdrawal freeze. Celsius is most likely illiquid, not insolvent. There's a deep understanding between the word illiquid and insolvent. Big difference, the run on Celsius caused by the FUD campaign and this current market cratering has dried up Celsius on hand reserves, and they now must retrieve the coins that have been repatriated. This takes time, but it's not the same thing as a bank run at all. Banks lend out fake money, so when there's a bank run, they can get to the point where there's no more money to return to depositors. Whereas Celsius is most closely described as a security lending company which lends on a 1-to-1 ratio. This means they can't lend out more coins than they have, so they'll get them all back and they'll make them available for withdrawal. I know this halt on withdrawal sounds horrifying, particularly if you are younger and inexperienced in trading. Most people within the crypto space are not yet experienced. But even the stock market has been halted many times because of the destabilized markets, freezing the markets to avoid total collapse. If you look at the crypto markets, Bitcoin is getting demolished and Celsius did what they needed to do to have the time necessary to unwind their replicated position, so they have some liquidity available for withdrawals. These are extreme times with bad actors creating undue stress on bargaining crypto industries. How these funding sociopaths. Now, the same thing that happened to the Central Bank of Russia, CBR. There wasn't enough money to simply cater for everyone that was withdrawing their amount of rubles. So what happened? The Central Bank of Russia decided to just give people a small portion on every other individual that is trying to withdraw the amount from the banks, either in commercial banks or in, say, in the central bank. What happened to the rubles? It crashed. Same thing is happening to Celsius. Celsius has crashed. In DeFi, Celsius is a DeFi protocol, simply meaning a decentralized finance protocol where people are depositing their cash, withdrawing their cash, and staking, but majority are staking. For example, Luna UST. UST had an APY, if I'm not mistaken, between 20 to 25%. They were giving that amount on a level of 20 to 25% as an algorithmic stable coin. Same thing to USDT on Binance. It's giving you an interest between a 5 to a 10% or 8% on the APY. APY simply means accrued per yield or accrued per year. So what happens on that stable coins? You'll earn interest accrued per year. You'll earn interest from today until next year on a level of 7 to 8%. Same thing is happening to Celsius. Remember, you normally make an agreement saying, I've locked my Celsius, I've locked my Bitcoin, I've locked my Ethereum within 2 to 3 months. Same thing that happened also to Celsius. Within Celsius, people locked the amount maybe within 3 months to 6 months. But prior to you not agreeing with the terms, maybe if anything happens, such as of now with the fathers happening this Celsius, and you'll want to withdraw your cash, there are normally penalties that occur in the market. Which penalties are we talking of? We're talking of penalties such as you won't get any profits or any staking profits that you've earned from the time that you've staked up to now currently. Those are some of the penalties that most DeFi protocols do if you're withdrawing your assets earlier. Same thing happened to UST. all profits were withdrawn for those that had UST before. It's simply because they withdrew earlier than they had made an agreement with either the exchanges or the DeFi protocol that simply was called ANC, and it's still there, Anchor Protocol. The nation of ANC are being treated like prophets instead of criminals. So, in simply talking of the large, big accounts within the crypto space that are fading about Celsius. I'll never know, but they have caused incredible damage to the crypto industry as a whole. What happens next with Celsius? I have no idea. If and when will you get your coins back? I have no idea. Alex should be one of the founders of the Celsius network. Let me also add that Celsius has to strike the right balance of maximizing profits on depositors' coin and having enough liquidity for withdrawals in extreme market conditions like this. Surges in withdrawal are impossible to predict, and as such, they run out of liquid coins, as I've explained earlier. So ask yourself, would you rather lock your coins so they can predict liquidity? No thanks. Take lesser interest so more liquidity can sit on standby, not competitive, or maximize interest at the risk of rare withdrawal locks extreme markets into brackets Celsius. This thing as the maximum interest paid for your coins, but everyone else can take out everything at the same time. You can't have everything. I've also explained earlier. You can't have maximum interest paid for your coins, but everyone can always take out everything at the same time. Those are some of the consequences that simply you'll experience when withdrawing your coins and not agreeing with the terms of the locking period. That is on DeFi. So Celsius is a DeFi protocol, decentralized finance within the cryptos ecosystem, or I should say, the crypto space. Then we are having the idea of algorithmic stablecoins. We have USDD that is being backed by Tron. We have also the Neutrino USD. It simply dumped today to 0.96. Now it's back up to 0.98. So it just lost its peg there for a minute, but came back. Why? They're using reserves. They're using Bitcoin reserve. They might be using Ethereum reserves. I don't know at up to this point. You can have to do your own research, but they're simply using reserves. Which reserves are we talking about? Let's first of all understand what are algorithmic stable coins. Now, when most people with some level knowledge about the crypto market think about stable coins, they imagine cryptocurrencies with stable valuation that they are pegged to a particular asset or fiat currency like the US dollar. However, algorithmic stablecoins are much more complex. They rely on algorithms and a second cryptocurrency to maintain their peg, making, making implosions like what happened to the original Terra coin. Let's head further to understand what they simply mean. What are stablecoins? If cryptocurrencies, for one thing, is volatile. Due to the highly speculative nature of cryptocurrencies, it's anyone's guess where each coin will go next. Bitcoin's value has been cut in half multiple times, but it generally comes out roaring back. Sometimes soon, but other times eventually. Other cryptocurrencies can be just as volatile as Bitcoin. However, stablecoins are an entirely different story. Some enthusiasts might see them as the bridge between fiat currencies and highly volatile cryptocurrencies. What gives stablecoins a stable price is their peg. For example, many stablecoins are pegged to the US dollar, which means their value should always be right around or ideally at exactly $1. The first stablecoin was BitUSD, but the first to gain widespread recognition and use was Tether, which is also pegged to the US dollar. While the dollar is a common peg for stablecoins, they can also be pegged to other assets like another fiat currency, precious metal, or certain assets. Those are standard stable coins. They are pegged to the dollar. They are pegged to fiat currencies. Stablecoins were created to remove the volatility associated with cryptocurrencies by pegging them to another asset that's far less volatile, aside from the reduced volatility. Stablecoins also offer reduced risk because they are pegged to uncorrelated assets. However, they also may experience the same level of volatility and risk as the asset they are pegged to. One of the concerns with standard stablecoins has to do with their peg. Repeatable stablecoins like Tether are actually backed by the asset they are pegged to. They are mostly backed. The standard stablecoins are normally backed by the dollar's currency, meaning that the developed Tether holds enough cash and equivalents to convert some or all the stablecoins supply into its pegged currency. Tether claims all of these coins are backed 100% by its reserves, although not all stablecoin developers do this. Now, that's the idea of the standard stablecoins. Which standard stablecoins are there within the market? We have BUSD, we have USDT, and you have USDC. So the most trusted stablecoins, I'm not saying I'm not affiliated with any other stablecoin. I'm just saying one of the best stablecoins out there currently in the market is USDC. USDT has a bit of some FUD. I'll expect you to, at least if you've bought or bought um, any stablecoin using a P2P, buy USDT, exchange it to USDT. It's safer compared to USDT. So what are algorithmic stablecoins? When someone hears that a particular cryptocurrency is a stablecoin, they typically think of standard stablecoins. No, that's the wrong thought. However, a new type has emerged, creating some confusion for those who don't follow the crypto market closely. Algorithmic stablecoins are far more complex than standard stablecoins, while they're pegged to a particular asset. They use algorithms to try to hold the peg in place. Most algorithm stablecoins are under collateralized, meaning the developers don't have enough of the pegged asset in reserves to back the value of the coins. This is one of the increased risks of algorithmic stablecoins over the standard kind. Look at this. We are having Justin Sun, the founder of Tron. He's been purchasing Bitcoin and Tron so as to back USDD algorithmic stablecoins. I won't advise you as of now within the market to simply invest onto algorithmic stablecoins. You may never know. It might be another crash like USD. Also, um, Neutrino USD might have another collapse like the UST. Let's continue. Another risk is the fact that they usually rely on a second cryptocurrency to enable them to hold their peg. The second cryptocurrency backs the stablecoin, and the algorithm regulates the relationship between the two coins using supply and demand. How do algorithmic stablecoins work? If you listen to this explanation I just explained earlier, he's using Bitcoin and Tron to back the USDD. How do algorithmic stablecoins work? When the supply of the stablecoin is too small compared to the amount of demand, its price moves higher than its peg, which is often the dollar. To push the stablecoin's value back down to a dollar, the algorithm burns $1 worth of the other coin to create $1 of the stablecoin. In the case of Terra, the protocol allowed users to trade $1 worth of the coin for one of the stable coins. Users could make money when the stable coin was minted by selling it for $1.01, earning a profit of 1 cent. The profits added up when it was done millions of times. Remember, when UST was crashing, Luna was burning, and that burning was creating an increased supply within the Luna ecosystem. That's why Luna crashed from $100 to even 0.000000 because the supply was increasing. They were burning much of the supply only to bring back the UST back to the $1 peg, but it couldn't be able to have made it until today at the date of 13th June 2022. In the case of Terra, the protocol allows users to trade $1 out of the other coin for one of the stable coins. So on the other hand, where there's too much of the stable coin compared to demand, the value falls below $1 in the case of Terra. You heard that Terra Labs and the rest of the whales simply sold their UST. So there was less demand within UST, but more supply. What happened? It had the crash immediately to 0.91 came back to 0.96, again crashed to 0.60 to 0.74. The protocol allowed Terra coins to be banned and Luna coins to be minted until Terra was again worth $1. That never came to be. As a result, the market could be flooded by Luna coins whenever the Terra coin fell below $1, meaning that the value of Luna could enter free fall whenever Terra's value fell below $1. Terra flew as low as 12 cents at one point, illustrating the fact that it had depegged from the dollar. Even after the rebranding of the coin, it hasn't regained its peg. Now, this is the idea of what will happen to stablecoins. I won't have to talk about this. This is a story of another day. This idea of the SEC trying to regulate stablecoins such as USDT, USDC, and BUSD. As of today, we've seen a drop of Bitcoin, quite nice. Okay, quite nice. We're seeing a drop of BTC to 22,645. If you've checked my video earlier, I said quite clearly that I'm expecting a dump of Bitcoin, another continuation of the dump of BTC today. Why? We have seen some of the factors that accelerated BTC's crash, but look at the stock market as of today. It's a bloodbath. Netflix negative 6.36% down. Tesla negative 6.46% down. Apple negative 3% down. Gold negative 2.41% down. Why are people running away even from gold? I thought it was a safe haven from a recession. Silver dropping down. Okay. Dollar yen dropping down. Pounds dollar dropping down. Euro dollar dropping down. Bitcoin dropping down. It's a black Monday for the whole of the crypto space and the stock market. So if you think it's only crypto, you are wrong. Look also at the stock market. Now, as I said earlier, the SP 500, if it's not able to regain this bullish trend line, then I'll be bearish. And I'm seeing it's simply broken it out. Because if I'm checking SP 500 as of now within the 1 day time frame, it's been oversold but not yet fully oversold. Let's look at those gauges point that you normally see oversold markets within SP 500. We are having the relative strength index over here being at 10. Right now it's at 21. Is it the bottom compared to what it was beginning of 2022? No. But the rest of the time, we normally see the SP 500 bouncing from a relative strength index of 25. On September, it bounced from 25. On March, it bounced on 25. On May, it bounced on 25, and now we are seeing it below that 25. Might it bounce from here? Probably, yes, it might, especially after the FOMC meeting. If you've checked my previous video, I said the FOMC meeting is happening on Wednesday, and that's where the Fed might decide further if we are going to go with a Fed rate of 75 basis point to 100 basis point. If you won't go on a level of 75 to 100 basis point, that means we'll be neutral at the current rate of 50 basis points. On the 50 basis point is just on the level of 0.5%. How will we be able to impose a 0.5% within the US market, that's at 0.5%, and inflation is now at 8.6%. Remember, they're having a target of 2% to 2.8% as the inflation rate should be neutral at that point. That's their target. They simply have to bring down 6% of inflation. How long will that take? Is it 4 years, 2 years, 3 months, a week, 4 months, 6 months? I don't know. N is equal to the number of years that are giving the Fed to simply regulate Bitcoin. They said that they had the Fed tools to regulate. Will they use monetary policy? Will they use fiscal policy? As of now, we're only knowing they're only imposing the Fed rates, and also they're also imposing the idea of quantitative tightening. I've not yet seen any bond that they have withdrawn from the assets by reducing their balance sheet. I've not seen any mortgages that they have simply reduced from their balance. So I simply don't know what the Fed will decide to do, but you'll have to wait until Wednesday to see the point on what they'll discuss on, and they'll give us a response on the next on the next tool that they might be able to use so that they can bring the inflation down. So I said beginning on Thursday, there might be some bearishness within the market. So the CPI data came out on Friday, and it was quite bearish at an 8.6%. It was expected at 8.3%. That was quite bearish within the stocks and also in the crypto space. Now, when the stocks happened as of today, just as of now, I said we might see a bit of some pump. So I said normally wait between an hour to 2 hours so that you can be able to know what's going to happen next in the markets. Now, we saw a pump in Bitcoin. We saw a pump from 23,283 to 23,935. Now we've seen a decline in that drop. Now we are seeing again another purchase, this within the 15-minute time frame. Bitcoin has been oversold even within the 15-minute time frame. Let's go to the 1 hour time frame. Within the 1 hour time frame, we are seeing lows of BTC. Look, the last low over here was at 12. Right now, we are seeing a low of 4.24. That's within the 4 hour time frame. Bitcoin has seriously been oversold. Look at the Stochastic Relative Strength Index. Okay, anytime that is this low, it normally bounces. Anytime that is on this low, anytime that is on this low, it normally bounces. Anytime that's on this low, it normally bounces. I need to see an inverted pattern happening in Stochastic Relative Strength Index, and also a bit of an inverted pattern happening on BTC. Maybe we can get that kind of a relief pump. But when will that happen? Let's first of all wait for the Fed meeting or the FOMC meeting to know the next direction we're heading on to. If inflation is not controlled, especially without the tools of the monetary policy and the fiscal policy, we might have a looming recession, which might break Bitcoin down to even $10,000 or $8,000 or $20,000 or $21,000 as the bottom. No one knows what's going to happen. Let's wait and see. Let's watch out. If you look at the liquidation, how long has it taken for them to liquidate both longs and shorts? Remember, on May, we were all dancing at 30K. Again, on 11th May, we were all dancing at 28,971. This was 1 month ago. They liquidated both shorts and longs. We pumped back, we came down. There's a time that we pumped to a level of 48K. Where is it? Where is it? Where is it? 38, 39, 38, 39. Okay, it was on this range. Yeah? So over here, BTC price was at $30,000. Everyone was going long. They got wrecked, got liquidated at 676 million. This was on a level average of, it seems to be of around 800 to $850 million. Again, we are seeing another average drop happened over here at $950 million. And as of today, we are seeing a drop of 1.02 billion. How long has this taken for the drop to happen? It's taken exactly 1 month. So 1.02 billion amount has been taken off from the market, and majority of those are who? Majority of those are the long position. Let me refresh this to see. Yes, longs have gotten wrecked. Is it at the maximum point of where it was before? No, but longs are wrecked. And shorts have been wrecked even more. That means people are now leveraging on a level of 25, 50x, 75x, 100x, and 125x. There's a lot of volatility within the market now. If you're doing a DCA, meaning dollar cost average, this can be a good time to simply buy a bit of some amount onto Bitcoin and Ethereum, because you're not rest assured if some of these other coins will ever come back to the price that they were before, such as Celsius. As we can see over here, Celsius dropped to, it's even trending. Celsius has dropped 49.7% within 24 hours. 24 hours, within 37 days, has dropped 70.2%. Celsius is down from its all-time high of $8 to now its price of $0. 0.22. That is 40x from the price it is currently. That's quite sad. So some of these coins may never come back, but it's better to invest on Bitcoin and Ethereum, simply doing a DCA, that is dollar cost average. Bonds have pumped up today quite high. We are seeing the bond at 6.23%. If you can check our relative strength index and our stochastic RSI, the stochastic RSI has decided to reset on bonds. But if you can look at this within the 1 day time frame, we are seeing a high peak of the bonds at 92.79. That's the highest that the US 2-year yield bond has pumped on the 1 day time frame. Same to the rest of the time, meaning that inflation is not being tamed between the near term and the longer and between short and the long term. Look at the stochastic RSI. It's also high within the 2-year yield bond. Everything is quite high. Has inflation peaked? That's the worry that people are having in the markets. Let's look at the 5-year yield bond. Same thing. The 5-year yield bond is also quite high on a rate index at 88.81. People are running on to bonds. Let's check on the 10-year yield bond. That means the Fed will have to kill the demand. They'll have to, there's so much demand right now in the market than supply. They will have to kill this demand aggressively. They won't care on what will happen to the stocks. They'll care about the US dollars crash. I'm expecting the dollar to, currently is the best time to have the dollar, but you're having a crash within the stocks and every other altcoin within the space. So the question you're currently asking yourself, should I do dollar cost average? The lowest point of it's easy for you to do the dollar cost average as of now with BTC, buy and store them on your cold wallets on a long-term view. You're not buying it as of now expecting a 10x, a 5x, a 2x, or a 20% on a shorter time frame. You are investing on a longer time frame. If you're able to look at our book heat map, okay, if you're able to look at our book heat map, we are seeing at our book heat map, first of all, let me refresh it. It's on YouTube, live bookmap. Okay, it's live bookmap. Rather than just paying out the bookmaps, you can use the live bookmap just on if you're trading for a day trader, shorting or longing on shorter time frames. Let's look at our bookmap. At our bookmap, you're seeing large orders at 22,500. Okay, worth at 880. We've seen one large green vector candle happening over here. Okay, it's bumped up to back to the 5 EMA. But as of now, we are seeing large orders at 880. But look at the sell orders. Sell orders are no longer there. It's at 359. More people are buying than selling. So there's much liquidation levels at 22,500. What does this mean? I'm expecting maybe a drop to 22,500 since majority of people are buying at the level of 22,500. And then if this sell-all has already been picked up, we'll try to have another sell-all. Look at the large vector candle happening right now within the market. Look at this large green vector candle. This is how much people are purchasing within the market. There's much volatility at this level. Look at the high volume compared to the rest of the time. There's much volume just some few minutes ago. So more people are buying Bitcoin than they are selling. They're simply imposing a dollar cost average method. Okay, they're simply imposing a dollar cost average method. So I've already talked about the stocks. You can also look also at the Apple stocks like Tesla. On my previous video, I'm saying I'm expecting a drop today until Wednesday so that I can seeing also a drop on Apple, Tesla, and Netflix. Netflix is even dropping more just because of their subscribers. It's dropping more. They're having low content within their markets. So that's it as of today. Thank you so much. If you liked the content, like and subscribe. Thank you so much. We'll meet up some other times. So bye bye.